Hey guys, Jared Wesley of Live Traders here, and I got a really important topic I want to talk to you guys today about. It's called Take Your Stops or Stop Freaking Trading, okay? I have a chart of CREE up on the screen because I want to talk a little bit about the other side of trading, the side that nobody seems to want to talk about, but yet it's a very real side of trading. It happens, I don't want to say every day, but several days a week at least. What's that? Losing trades, okay? I want to go over CREE because this is a trade that I took today, okay? And I stopped out on and I lost money on it, okay? Everybody wants to talk about all the winners, the winners, the winners, the winners, but the real traders, the money-making traders, the professional traders know that it's how you manage your losers that will ultimately determine if you're going to be a trader tomorrow, next week, next month, or next year, okay? So let's first take a look at CREE, and then I'll get into the bigger topic of taking stop losses, okay? So let's blow up the weekly chart on CREE here, guys. Let's blow this up really big, okay? Pivot support area, pivot support area, pivot support area, pivot support area. Now remember, support is an area, like I said 4 times. However, once this area is broken, generally this stock will continue lower. Now, the negative here on CREE is that it's down 3 weeks in a row, and then we get a gap down today. Now, the positive about the gap is that I'll draw a line here, and you can see that CREE got under this area. So now let's switch to the daily chart, okay? And you can see this pivot over here. That was the low of the last several years. So this 20.82 area is very significant for CREE. Okay, so when CREE gets under this 2082 area, not only is it taking out a daily pivot, but it's also taking out 4 weekly pivots. That's dynamite, guys. If this thing gets under this area significantly, it's gonna drop like a stone, okay? Free falling to the floor, okay? So this is the main reason I liked and looked at CREE today, because it was gapping down under a green bar and under a bottoming tail pivot and under 4 weekly pivots. So I had good reason to really like this stock. But what really put me over the edge, what I really liked about it, was this beautiful pre-market consolidation at $20.50. Okay? Right here, this is all pre-market, before the market opens, before 9:30 a.m. Eastern time, okay? Coming down to 2050, 2050, 2050, 2050, 2050, okay? So I told the members in the Live Traders chat room, I said, hey guys, I really like CREE today. It's one of my favorite ideas today, okay? If I'm going to trade it, it's going to be at or under $20.50, and my stop loss is going to be somewhere between 2082, that weekly pivot, okay, and $21. So you guys can see it. So as soon as the market opened, you can see 930 right there, draw a line to it, okay? This stock came down to 2050. Now, it had a bit of a spread, about a 10 or 15 cent spread, okay? Now, on this particular play, I was risking $500, okay? So we used a 50-cent stop on this. So to risk $500, I'd need 1,000 shares. But here's the kicker, and I often do this in the first 5 or 10 minutes a day. And this is a different topic, but I want to just touch on it briefly. I took half my shares at 2050, so I shorted half my shares at 2050, and the rest of my shares were put at 2049. Okay? Now you ask yourself, well, why would I do that? Well, multiple reasons. Okay? CREE is a spready, whippy stock early in the day. All right, so there's the possibility that if it breaks $20.50 under daily support, under weekly support, that this stock will skip me and just keep on going without me. So to mitigate that, so I don't get skipped, I put half my shares right at 2050 and the other half at 2049. And today is the dreaded, what I call anticipation stop out. Okay, where what that means is when the stock triggers you on the penny and then it goes against you. Thankfully for me, it did not trigger 2049 and fill my full position. It only filled half my position, okay? But here's the thing I wanted to talk about. It filled me at 20.50 and then immediately went against me. Immediately. And on top of immediately going against me, you can see this topping tail, this thing went up to 20.40, 20.38 I believe it was. I took some bad slippage on this, about 15 cents, okay, slippage on this. Well, as soon as you get into a trade, the second you're filled on it, you need to put your stop loss on. Before you put your target in, you put your stop loss in. Guys, protective stop losses are your friend. Protective stop losses are your friend, okay? We don't know how high this stock could go. It could go to infinity, all right? One of the biggest reasons that traders fail in this business is because of poor money management. They do not know how to manage their account. What happens is they start drinking the hopium because we're emotional creatures, and emotions are not conducive to success in trading. Okay? Our mind is a beautiful thing, but we have to stay grounded. We have to stay objective with our thoughts, and that's no easy task. So, as soon as you get into a trade, either enter with a bracket order so it automatically places your stop loss, or as soon as you hear that ding dong or order filled, place your stop. That's exactly what I did. I placed my stop at $21 right there, $21, okay? It promptly, within 1 minute, stopped me out with slippage. Now guys, I lost $250 plus slippage, and the slippage for me was somewhere in the neighborhood of $80. Not a big deal, okay? Not a big deal. But imagine if I chose not to take my stop. Look how far this thing went against you, right? 21's your stop, so you're willing to risk 50 cents on this. It didn't go 50 cents. It didn't go $1. It didn't go $1.50. It didn't go $2. It didn't go $2.50. The damn thing went near $3 higher. Think about that. Instead of losing 50 cents, you could have lost $3. You could have lost 6 times, 5 or 6 times more money than you intended to. Now think about that for a second. What if this didn't stop? What if it went to 25 and then tomorrow it gaps up? Now you're down 10 to 1 on this thing. That's foolish. That's stupid. Okay? See, most traders understand that taking a stop loss is a good thing, but actions speak louder than words. Okay? To know and not do is to not know. You see, guys, by accepting a loss, you're admitting you're wrong. And in turn, you're going to lose money. The problem is most traders have a very hard time accepting or facing this pain head on. So they forgo their stop loss. Why? 3 letters. E-G-O. Ego. Oh my gosh, if it stops me out, that means I'm going to start the day, in the first 2 minutes of the day, I'm going to be down. And that means I got to get that money back, and that means I'm wrong on this trade. So what do? They don't take the stop. They drink the hopium, the Kool-Aid, and they think eventually the stock will turn around. And maybe even sometimes they cost average in a losing position. Sure, the stock pulled back to $21.50. It's still more than double your stop. It's 2.5 times your loss. Okay? You'll literally do anything to avoid the prospect of becoming a loser on the trade. Sound familiar? Well, if I'm talking about you, you need to listen up, okay? Most things that we listen to, most things that we learn in seminars, when you come to Live Traders and you hear me speak, or you hear Anmol, tremendous trader Anmol Singh, speak, okay? You're like, you know what? That makes sense. That sounds logical. Find a pattern, stalk a quality entry, locate a reasonable area for the stop, pull the trigger, sit back, and manage the trade. Let the stock do the work. It's simple, right? And here's best or worst part about it. If you ask someone for technical advice, you could probably spout off or rattle off every objective, logical advice in the world worthy of a true professional trader, as long as you're not in it yourself with real money. See, most people say, yeah, Jared, short this under 20.50. Look at that beautiful breakdown. It's breaking under a weekly quadruple bottom. You're going to put your stop loss somewhere around $21, maybe a little higher. Yeah, I got it, Jared. That looks awesome. You can spew the advice to me all day long. But as soon as you put your own money in it, you lose objectivity and you become irrational. Both of those things are expensive, okay? Both of those things are expensive. So the first thing you got to understand is, do you like trading? Do you? Do you really like trading? Is this a business that you can see yourself doing? I mean, think about the flexibility, the freedom, the money. You could do this from anywhere in the world, an hour a day, 4 hours a day, whatever. Do you really like this business? If the answer is yes, then choice is simple. Take your damn stops, okay? Either take your stop loss or quit trading, period. That's it. Take your stop loss or quit the business, okay? Take some time. Really internalize those thoughts. I want you to really think about it. Imagine your life as a trader. Imagine all the possibilities, the traveling, okay? The flexibility and freedom to spend time with family and friends, the money, okay? You can earn as much or as little as you want. You want to go on vacation? That's your choice. You do it anytime you want. You don't want to go on vacation? Great. Sit here and trade. Can you handle the alternative? And you ask yourself, what's the alternative? Well, the alternative is called a JOB. It's called a BOSS. Having a job with a boss who tells you when you can come, what you have to do when you get there, and when you leave. Okay? So if you've decided trading's your passion, you have to do what it takes to succeed. And that includes taking your stop loss. So before you enter any trade, including CREE, I knew my risk was 50 cents, period. And I took slippage. I took 15 cents. That's okay. That's part of the trade. Okay? It doesn't happen on every trade, but I still got out. You have to accept that the money you've put into this position, the money you risked, the 50 cents on 500 shares that I risked, was gone. If you're risking $500 on a trade, the second you get into that stock, the possibility of losing it is very real. You have to accept that. You have to accept that. Okay, guys, not every trade works. And guess what? I don't care how good the trader is and how good the seminar teacher is and how much swag they have and, they do this and they do that. It's like, I never lose. Bullshit. Okay, listen to me. Everybody loses. Everybody loses. Great traders lose less often. Bad traders lose all the time. And not only do they lose all the time, they lose big all the time. You want to be a great trader, accept that losing is part of winning. It's part of this business. And remember, it's just one trade. So, don't let that one trade wipe out your account, destroy your trading aspirations. Is one trade really worth it? Answer that. Answer me that question, guys. Is one trade really worth it? Was your ego really worth thousands and thousands of dollars? Do you know how many traders I've spoken to through the years that have blown up multiple accounts? And here's the kicker. They think it's a badge of honor. Blowing up account is not a badge of honor. That's just stupid. Okay? It's just stupid. You should never blow up an account. Never, never blow up an account. Your risk should be so small when you start that you can make hundreds of mistakes, thousands of mistakes, and not blow up your account. Okay? You won't change until the pain to change becomes greater than the pain to stay the same. I truly believe that. So ask yourself, how much money do you need to keep losing before you change? You know what I'm talking about. It's Monday. You had all the psychological warfare through the weekend. It's Monday morning. You're ready to rock and roll. The first trade goes against you. You don't take your stop loss. Bam, you lose 5, 6, 7 to 1 on the trade, and it takes you the whole damn week just to get back to break even. Well, that's not trading. That's gambling. That's just dumb. Not adhering to stops is a very serious problem. One of the positives, though, can be fixed quickly. Have somebody watch you trade. Videotape your own trading. Okay? Then you can go back and see how you're acting. A lot of times, not taking a stop loss, it's not just ego. Perhaps you're risking too much money. So, I hope You guys learned a little bit about why it's important to take your stop losses, because there is no greater thing we do as traders than money management. Account management is the number one thing that we do. Remember, guys, you're going to lose on trades, but if you keep those losses under control, the winners will have a much bigger impact on your P&L. And when that happens, you make money. Okay? You make money. So ask yourself, do you want to be a money-making trader, or do you want to be a loser? If you want to be a winner, come to Live Traders and learn how to trade properly, guys. This game is not bullshit. It's a very, very serious business. Okay? CREE, full admit, I love the pattern. I would do it again. Got in at 20.50, stopped out at 21.15, slippage. Stop was at 21, filled me at 21.15. I took my loss like a man and moved on. And guess what? I lost $260 today. I took another trade that was a small winner, and I took another trade after that was a small loser. CREE ended up being my whole day today. That's the way it goes sometimes. That's real trading. That's not BS marketing on the internet. That's real stuff, guys. If you want to learn from the pros, come talk to me, Jared Wesley at Live Traders, or Anmol Singh at Live Traders. You can email me, Jared, Jared, at livetraders.com. You can go to info@livetraders.com. You can email Anmol, ANMOL, at livetraders.com. You want to learn how to be profitable, you come to Live Traders. End of discussion. I hope you guys have a great day. Take your stops, or stop trading.